Hello everyone, welcome to yet another video. Now, the last video that was uploaded was the weekly analysis for last week, or rather the last month, for February, and it was profitable because we were able to clear a phase one challenge. So moving forward for this month, as we all know, Euro USD, basically the dollar pair has been in a mid-range consolidation, meaning it has been consolidating for a while. You know, it may have been bearish on the on the monthly time frame and on the weekly time frame. I love the fact that it maintains structure. During this mid-term consolidation or reversal. So on the weekly time frame, we kept being bearish. But we cannot trade in the manner that we trade and not wait for all the time frame to be in confluence. Now, it's graded like this. There are A plus setups and there are B plus setups. There are trades that that are A plus and there are trades that are B plus. That's what I mean. Now, I will always advise that the A plus setup is always taken. It improves your chances of profitability. It improves your chances of winning. Your probability is higher. Imagine having to choose from a 95% chance, a 95% trade and a 70% trade. I would choose a 95% trade every time. Now, do we always get 95% trades? No, because the markets, just like the dollar was, the Euro USD, the ADSD and the GPUSD, you know, they were in what we call a midterm, reversal. So, but that's ended now. That's done right now. So, as you can see, these lines, if you've been watching the videos from the past, you will see that these lines have been here since forever. These lines have been here. The prices remain the same. They haven't been touched. They haven't been moved. Now, if you look right here, you will see that we've created the double top, just like the video we made where we said we talked about chart patterns. We talked about what chart patterns. So we've created a double top right here, and whenever we see double tops, it means that we're expecting a reversal, and that's what has happened. We have had a break of the neckline, and now on the 4 hour that we look for retest. Now there's something rather that needs to be understood right here. Now, to be able to know how much or how far this retest might be or might happen for, I need to know the previous one. I need to see what happened in the past. For example, right here is a break of structure. You know, this is a break of structure. This is basically head and shoulder, but it does not give me, enough consolidation to be able to predict how long this one will last for. So I didn't get in. I didn't look for trades. Now we've had our first consolidation, which is this one right here. Now this would be the consolidation that I will use to expect the market to come back into this area again before I go short. I hope you understand what I'm saying. So, what I'm saying is this: I need the past to predict the future. There is no past here. The past happened here, but the dilemma is this: the past has happened inside, the area of interest we're expecting to get trades from, which is 1.04 thousand. This is the price that I expect to get trades from. But I expect the market, because it's a new month. It's a new month, and the monthly has to create a week. The weekly has to create a week as well. So we're expecting the market to give us that little retest, and make it sweet for us to be able to, get in. So what do we do? And just exactly like it happened here. If you look at the past right here, you can see that we had a break, a retest of some sort, and we even broke structure, but it came back down right here and retested it. So we're expecting this movement right here to happen here. If you look at the weekly time frame, you can see that there are confluences at hand that's telling us, okay, yes, we are ready to go to the downside. You know, if you look right here, this is a double top, but it's not a double top until we break the neckline, which is here. But we're anticipating that it does. Now, if you look, these are chart patterns. One more time. If you look right here, you can see that uh, this is similar. I mean, this is similar to what's happened right now. So let me box that up again. This is similar to what's happening right now. So if you look right here, you can see that this is similar, and the market always repeats itself. So it's going to repeat the same move that it has made. So if you look right here, you can see that this move right here, this move, these three candles, you can see It is similar to these three candles. This is what we call an evening star. This is an evening star. Just like the double top, double bottom, head and shoulders. These are also chart patterns that shows reversals in the market. Now, it's it's to be able to count it as something important. It has to happen at an area of interest. It has to happen at the price. It has to happen at the price that we've marked out. Now, this price right here, we've had it forever. So an evening star appeared there, it meant that we're about to fall all the way to the downside. Now, at this area of interest as well, an evening star has appeared there again, and it also indicates that what we should be expecting a push to the downside. Now, you can see that we are building a lot of confluences, just like we're having this double top, but it's not yet a double top until we break this neckline right here. Then it is a double top, and we're also having evening star confirmations. All these things tell us that we should go to the downside, and the higher the time frame, the stronger the signal. So the higher the time frame, the stronger the signal. So the higher the chances we're having to go to the downside, has just increased to 95%. Now we can look for entries. Now we can look for trades. There is no sense, I repeat, there is no sense in looking for a break and retest and buy all the way to the upside on a pair that is bearish on the weekly and is bearish on the monthly. I was watching this particular lad on YouTube. He would sell here, he would buy here, he would sell here, he would buy here. At the end of the month, he was able to make at least 2%, 3%. That's not how trading is. I mean, yes, you're able to make money, but it's something that is done for a long term. You cannot say, oh, let me take this little profit for a short while. Let me take this little profit for a short while. You're going to take losses in that way. You are susceptible to loads and loads of losses. That also exposes you to trading to over trading. So imagine you are taking two trades or three trades a week times four. You see what I'm saying to you? You are taking loads of trades. You're taking loads of trades, and you're susceptible to losses. You are susceptible to market manipulation. So all I'm trying to say is this: wait for the right moment in the market. Your capital being at break even is also profit. You do not have to make money in the market to be in profit. If you leave your capital for a whole year and don't touch it, that's profit. You see what I'm saying to you? As long as you are not in drawdown, you are in profit. So I'll urge you lot to refrain from the mindset of buying and selling, buying and selling, buying and selling. Stick to one direction, stick to one pair, and watch the profit rolling. I'm telling you, watch the profit rolling. Yes, this is something that it took me time to be able to understand, because if you spend time in the market, if you spend time observing a craft, you will see that time will tell. The test of time will show. What do I mean by that? For example, you buy and sell on Euro USD. You sell here, you buy here, you sell, you buy here, you sell here. For the right person who is just looking for sales, looking for sales, looking for sales, he will stand the test of time better. At the end of the day, basically, at the end of the day, you will see that he is the one who's going to come out profitable. For example, I sold here, I've taken a profit. I've sold here, I've taken a profit. You know, so you've come here and you've bought here, you've taken profit. So basically, I've taken two trades, and you've taken about three trades, right? Now you've come and you're buying here, all of a sudden it comes and it takes you out. You've taken a loss, right? You come now and you sell here. I took a loss here. Now, not because I didn't follow my plan. We were coming off of an area of interest. We were very much bearish, and the 4 hour time frame gave us exactly what we wanted. But these are the things we're talking about. The market will always, have its own agenda at heart. The market doesn't care about my area of interest. The market doesn't know. Trading view doesn't care if I have, an area here, an area here. The market doesn't care. All the market cares about is that it has to fulfill prices. It has to move in the way it wants to move, not in the way I want it to move. So we have to follow the market. We saw a head and shoulder. We were talking about head and shoulders, bearish engulfing, to break of pattern trend line, break of structure. Everything looked good, right? But at the end of the day, we suffered a loss here. Now, did the loss set me back? No, because I have risk management. The difference between us traders and those who gamble in the casino is the fact that we have risk management. We have confluences. These things help us to be able to overpower the market. Loads of people cannot overpower the market. They see it as, oh, it's a scam, oh, it's impossible. Your mindset is impossible. You are the one who is impossible. You need to be able to, suffer these losses, and be able to sleep at night. Imagine suffering a loss and you wake up in the middle of night around 2 o'clock, around 2 a.m. rather, and then you're unable to sleep. You're unable to go back to sleep. All you're thinking about is the loss you just suffered. Why? Because you've over risked. Why? Because you did not follow proper risk management. But imagine me, I wake up at 2 a.m. and I see, oh, boom, stop loss has been hit, right? I'm able to go back to sleep peacefully. Why? Because I know the next trade or the next two trades will give me all I have lost because I have proper risk management. You know, and that's it for Euro USD. So the second pair we have interest in is CAR JPY. If you've been watching the following the analysis we've been making every week, you would see that CAR JPY has been doing the exact thing we've been saying. CAR JPY hasn't done anything ulterior to what we've been saying. Everything we say it hits. Everything we say it hits. When we make this analysis, we are striking gold. We're not just making it for to make money on YouTube or whatnot. That's not the agenda right here. The agenda is to be able to bring understanding and knowledge in the right way to you lot. You see what I'm saying to you? So USD CAR JPY, the last weekly analysis we made, this was where we were. This was where we were. This was how the last week ended, and we said we're expecting a retest of this into this level, and it dropped to the downside. What happened? It came, it retested it, but we were shy of. This is what following your plan means. We were shy of. We were what shy of. But at the end of the day, the market what came all the way to the downside. Predictions are pure. The predictions are true. You see what I'm saying to you? The predictions they happen. Now following your trading plan, this is what it entails. You know, I was waiting for the market to give me a replica of this amount of consolidation before I take interest, right? You know, so if I box it, this is how I wait for my retest. This is how I wait for my retest. So this is what I wanted to happen. Now obviously the box was filled. The box was filled all the way to the side, but the market never touched this price. Now I will not say, oh, I'm shy of, you know it's still the same thing, let me get in. That's not how I get in. That's not how we trade over here. We follow the plan. Now if I had entered, if I had entered and I had manipulated this price that I said I was going to enter from, and you go to the last video and see that, oh, it has been manipulated, the trust will go. You see what I'm saying to you? Not just you lot, but it helps me to understand that my plan is the most important thing. Following your trading plan is the most important thing. You can have the best strategy. In fact, there is no best strategy, but there is following your plan. The only way, or rather, one of the ways to be successful in trading is following your trading plan. Having the best strategy is one thing, because even the best strategy take losses. As long as it's not the market that's giving you the strategy, and it is you who's formulating it from an emotional standpoint, from a psychological standpoint, from a human standpoint, you are bound to take losses. As long as it's not the market that's telling you, okay, buy here, sell here. Itself, the market itself, the entity of the market, I'm not saying an indicator. I'm saying the market itself. As long as it's not calling you up saying, okay, I'm ready to go down, sell, I'm ready to go up, buy. Trust me, you are bound to take losses. Do these losses mean you're wrong? No. Do these losses mean the market is hunting your stop losses? No, it happens. Take the loss, move on. That's why that's why stop losses were invented. That's why risk management is implemented, because these things help us beat the market every time, every now and then. So moving forward, yeah, we were shy of, so we couldn't take this trade. We were shy of, so we couldn't take it. I followed the plan to the latter. I needed us to touch it. It is important. It is imperative for us to touch it. It is very, very. I know what I'm saying. I know what I'm saying. These are the things that they call liquidity sweep. These are the things that they call liquidity sweep. Market manipulation. You see how let's go on the 1 hour. It's more elaborate. You see on the 1 hour how we were basically shy of. You see all this space above. You see all this space above, right? These are the people have stop losses right here. Now, if the market had come and done all of this, made all of this noise right here without touching our area of interest, it fell all the way to the downside. Now, people might think, oh, it's selling. Oh, let me jump in, and then boom, it goes up all the way into our area of interest. Now you will say you were manipulated, right? Because your stop losses were at the wrong place. Now you would say, oh, liquidity sweep. You have to wait for the market to do the exact thing you've planned. Follow your plan. Sometimes following your trading plan might not make you money, might make you miss trades, but it will help you to avoid unnecessary losses. You do not want unnecessary losses at all. Those hurt even more. You do not want unnecessary losses. You don't want to take a loss that makes no sense, that you know you could have avoided. You know. Now what did I do? I waited. Now waiting, did the waiting profit me? No, no, it profited me rather. Sorry, yes, because I was able to keep my capital. I was able to keep my capital. For myself. I didn't, jump impulsively. You see what I'm saying to you? So yes, it stopped me from getting into a trade and probably profiting in all of this move. But I followed my trading plan. The one time you may not follow your trading plan, the one time you may be like, oh, this has happened before, let me get in. The one time is that one time that you may take a loss. Follow your trading plan. Just follow the trading plan. You see what I'm saying to you? But for the week, we took a trade actually, and we profited. It was USD card as we made the video last time. If you go back to the video of last week, you would see that we made a video and it was right here. This was where the market was. This was where the market was. It was right here. This was where the market was. Around this area right here. We hadn't planned to get this push all the way to the upside. Now, the plan was this. If you go back to the previous video, you will see that we said we need a shift of structure on the daily time frame. We were bullish on the weekly. We were bullish on the monthly. We needed a shift of structure, and we got that on Monday morning, or rather, on Monday evening. After Monday, on Tuesday, that was when I executed the trade because why? We had a double bottom, and it closed above the neckline with a shift of structure. All of these things are confluences that made me enter the trade. These things improve my chances of becoming profitable at the end of the trade, at the end of the day, at the end of the year. So if you're following us, if you're understanding what we're saying, you will see that if you've taken these trades in the manner that which we have said it should be taken, you will see that you will profit way more. You will trade way less. you know these are the rules, these are the unwritten rules in trading that help traders. All those things that you see online, all those many loads of trades, loads of scalping for 5 minutes, making $1,000 in 5 minutes. That's nonsense. They don't make money. I'm telling you, they don't make money. They lose today, they lose tomorrow. That's not trading. You see what I'm saying to you? So I urge you all to subscribe, like the video, comment, and share, so we can have proper algorithms so that more people can be able to view and learn from what we are learning from. So I hope that we have a blessed week, we have a blessed month. May God bless everyone. Amen.